So welcome everyone to this online event. Today we are talking about building a data science startup and moving beyond your possible data science project or pet project. My name is Peter Zegen and I'm hosting the startup section of the DataFest 2020. For those of you who don't know, DataFest is a conference organized by Open Data Science, one of the largest European communities of data scientists. Right now it's roughly 50,000 people. And today I'm talking with Paul, who is a managing partner at Episode 1 Ventures, a seed stage fund that invests in software companies and is headquartered in London. It's a pleasure to have you here, Paul.
Thank you. It's a pleasure to be here.
Awesome. As a kickoff, can you please introduce yourself and maybe tell a bit more about Episode 1?
Sure. Be happy to do that. My name's Paul McNabb. I've got a background that includes several stints as a VC, as an entrepreneur, and also working for large corporates. I started my career in London working for Accenture, moved to the US, worked for a couple of smaller companies, and then started a couple of my own businesses with a mixed bag of success. Some I did quite well with, some not so much. On the back of that, I worked for the first time in venture capital in California, moved back to Europe, worked for Cisco for a long time in lots of different roles on a global basis. And then when I left Cisco, I joined Episode 1, which is a seed stage investor here in London, investing in UK-based software startups.
Yep. Can you maybe give us a couple of examples from your portfolio of data science related startups, the one that you excited? I understand that you are excited about all of them, but maybe just a couple of examples.
Yeah, I mean, I think data science is really super interesting, right? Because it's one of those things where it kind of went from being, the really kind of incredibly sexy technology that everyone's excited about, that was almost enough in and of itself to create a startup, all the way through now where it's something that actually everybody needs to think about and needs to be part of the mission of almost any business, because everybody's generating these huge data trails. So I think almost all of our businesses now are thinking about data science as they are about AI, but a few that we have focused on that are really kind of sort of super deep and super concentrated in that in space include the one, Peter, that you and I worked on most recently together, which is a company called QuestDB, which is building a next generation time series database. So time series data, whether it be from sort of internet or mobile events, whether it be from IoT, financial trades, there's all sorts of things that are creating these huge trails of data that are sort of time sequence or time dependent. And there have been a number of players that offer databases to support that kind of data, which has a particular set of structures and things that people want to do with that data, manipulations and applications for that data that are quite repetitive. There have been a bunch of people that have created those things that tend to be fairly specialized. The company that we led the investment for has got some combination of incredibly fast technology, very, very close to the sort of physical infrastructure on the machine, but also with a very easy to understand and accessible interface. So that's one example. Another example is a company called Oquan. Oquan is a company that bridges data science into financial markets problems. So what they are doing, the founder was a quant for a big hedge fund, and what they're doing is they're sort of turning market issues such as what is the correlation between commodity prices and weather, or commodity prices and weather, and the stock markets, different countries, and all these other combinatorial kinds of problems that people look at, and then turning them into math problems that data scientists respond to through a big community that they've built. Another example is a company that we invested in fairly recently called Sano, that is looking at bioinformatic data. So they're pooling the results of genetic disease information across, all sorts of providers like 23andMe to create kind of macro data sets, and then sort of analyzing those for patterns, and then sort of commercializing that kind of data, or making it available to much bigger trials. So it has definitely been a theme. It's things that we have invested in at the infrastructure level, at the data science as a service level. But I also think it's increasingly something, as I said, that we see sort of being folded into the broader portfolio.
And I guess that's an interesting moment, that pretty much every vertical, every industry, every function is affected or will be affected by data science and machine learning and AI. So I'm curious, if we understand that there are a lot of opportunities, what could be, in your opinion, a framework maybe, or a hint for a potential founder, to understand that a pet project that he or she leads in his or her garage, let's say, might become a startup? What could be the flags for someone to understand that my pet project actually might become something bigger?
Yeah, so it's a really good question, and a very complicated question, I think. Certainly at the infrastructure level, there is always need for sort of new tools and new platforms to help make data science more accessible, to provide tools towards practitioners, to make metrics make services and software like Quest, as we were talking about for the time series database, available. And as we think about the demand side of this sort of digital economy, I mean, the number of applications, the size of the data streams are just exponentiating. And so the volume of transactions that needs to get performed is just increasing at an exponential rate. So the infrastructure that needs to be there to support that is just going to need to continue to grow and transform and provide productivity. I mean, we live in a world that, from an IT point of view, has been dominated in recent times by the success of the public cloud. And that has been a fantastic boon to data science and AI practitioners around the world. But we increasingly know that sort of centralized and one computing architecture sort of paradigms aren't going to work for every kind of problem. There are all sorts of problems that need to be done on the edge, for which latency is a big issue, for which the sort of standardized x86 compute architecture isn't really going to scale, isn't really going to work. So there's a ton of work, I think, that still needs to be done in that space. And there's a lot of investor interest at the moment in those areas. I think as you start to go further up the stack and you start to think more about the application side of it, it becomes the nature of the problem changes. So there are things, if you, for example, if you've looked at one of the ways I think about this is, if you think about any kind of industry, it's generating these huge data streams. And it's fair to say these days that data about things is actually more interesting than things themselves. There's all sorts of sort of secondary and derivative things that you can do with data that is generated about an industrial process, or about any kind of a business that can actually give you insight and accelerate decision making. And so the data about activity, the data about things becomes more valuable in some ways than the things themselves. And if you are working as a data scientist or an AI practitioner, and you've identified new ways to collapse a data stream or to analyze something in real time, I mean, that can be very exciting. And I think whereas a few years ago, if you just had that sort of expertise and you had that technical breakthrough, that would have been enough to get investor interest. I think now investors actually now want to see a little bit more of the full service. They want to see that you understand the customer, that they want to see that you have perhaps some access to some proprietary data sets or whatever it is that you can use to train or to practice on. It's not just a theoretical problem. You can prove that there is some practical application that you can bring to the startup, and that there's some knowledge of the end customer problem that can be solved. I always used to think that, 5 years ago, really, really smart people with PhDs in machine learning or AI could get funded. The next stage was you needed to be those people, but you also needed to have access to proprietary data to do your training. And now you need to have those two things, but you also need to have customer insight or access to real customer traction, because you can, investing in science projects is a lot of people invested in science projects and haven't had the outcomes that they want. And in between those two things, so we talked about infrastructure and then we talked about the application layer, but in between those two things is a universe of opportunities that has some of the characteristics of both. So we've had this whole progress of kind of the auto ML space where people are looking at ways to make the capability of we know that the good news for all of you that are listening to this is that you have a skill set that is in massive demand, and we know that the world needs many, many more of you than there are of you, and so that's probably going to stay that way for a while. So there's been a tremendous amount of interest in, well, how do I scale the productivity of that cohort of people? Because not every company can afford to go and hire an ex-Google data science person or ML person for $250,000 a year or whatever it is that costs. So there's all sorts of stuff in the middle, I think, about making the jobs of either ordinary researchers or accountants or folks like that more scalable through the application of data science, creating auto ML or auto data science tools and libraries and paradigms. So there's a world of stuff in between, I think, that offers industry and application focused libraries and tool sets that can be super productive.
Yeah.
That was a very long answer. I hope that made some sense.
It's a good one. And you mentioned a very important thing, in my opinion, the evolution of the lens, maybe, or how investors do look at data science startups. So from purely research-driven startups through access to data, and right now it also includes some customer validation. So I'm curious, how do you guys, what kind of milestones, what kind of indicators do you expect to see when you work with a startup at the seed stage? I understand that you are first institutional investor typically, right? There are some angels, there might be some angels before, or you are one of the first institutional investors. So how do you look at startups? What kind of milestones do you expect to see in case of data science startups?
Yeah, so I'll just clarify perhaps our position, our criteria as a first instance. So we're typically the first institution to invest. We normally would write a check of something like £1 million in a total funding round that could be, $1 million, $1.5 million, perhaps up to 2 million, something like that. And before that, there's perhaps been 300K, 500K, maybe some grant funding, depending on the nature of the business. You often see that in very technical businesses, that there have been a couple of grants, perhaps some university funding or things of that nature. So maybe a year, a couple of years into the evolution of this concept before someone like us would invest. Now, the stage at which we invest, the business is still very much in the future. So what we will look at is the signals. We'll look a lot at the founding team, the quality of the team, the mix of the team. We'll look a lot, in the case of a business like this, at the technical foundation. Who is the real technical visionary? How differentiated is that person? If we'll do references around that and try and really ascertain, do the folks that have worked with them, in some cases sort of academic supervisors or sometimes co-workers, occasionally it will be enterprises or folks that they know from elsewhere, what they think about them, what do they like to work with, how do they scale as an engineering lead, and all those kinds of good things. But it's an awful lot about understanding who the team is. And part of what you want to see from the team is that they have a very clear idea about what the problem is that they're solving. Yeah. I mean, the only thing we know about a company at this stage is that everything's going to change. People are going to come with spreadsheets and PowerPoints and tell you, look, we're going to do this, we're going to change the world, we're going to be a £5 million company in a year, and all these other kinds of good things. And of course, none of that stuff is ever going to play out at this stage because there are just too many unknowns. But what is important is that the team that you're going to back has got a great mix of skills to address the problem. They're going to deal with the hurdles and the challenges as they come along. They've got to run through a brick wall if that's what needs to be done to solve a problem. And the first instance of that, in the case of something like a data science or machine learning kind of a startup, is that they've got a sensible grasp about what the problem is that they're solving, i.e. who is the customer, what is the pain point that the customer has, and that they're not in the business pushing some sort of cool technology that they think ought to be really super useful into the world, and that, you know, and that customer adoption will just happen. Because if you're dealing particularly at the enterprise level, you have a very, you know, there's a famous anecdote that that's been attributed to Mark Andreessen, which says that if you're backing consumer businesses, breakout consumer businesses, you invest in, you know, two folks who are doing something completely bonkers that you don't understand at all. And if you're investing in a B2B space, you want to invest in a team that, you know, knows the business, has done it before, and has preferably done it together. Because enterprise is very different from consumer. Consumers either adopt something or they don't. Enterprises, you've got to figure out the rhythm of adoption that will fit into a purchasing pattern that enterprises have, right? People in enterprises are part of a very complex mechanism, and they typically can't make one-off decisions, and they won't make decisions just on the back of something being cool. They'll make a decision based upon how it fits into an overall workflow, or how it addresses a milestone or a KPI that they are responsible for. So one of the things that we're really looking for is, we don't expect you to have all the answers. We don't expect you to have any revenue typically, but we do expect you to have some insight into the business, what the customer pain point is, usually at least one person that we can reference that you've been working with at some level. Again, doesn't have to be a paying customer, but maybe someone that's co-developing the technology with you, or, you know, has put their hand up and said, we absolutely buy what these guys are doing. This is a fantastic idea. It would be transformational if it happened. Sorry, a little Zoom, somebody coming in. So you want to see that whole pipeline. We've got a good mix of skills. I've got some really, really capable technical people that have got something a little bit differentiated and have a very clever insight. And then I've got someone that can take that understands the tech, understands the product direction, but has also got real kind of customer insight and has identified a problem that's worth solving.
Mm-hmm. Amazing. Yes. These are the very clear definition and description of milestones, actually. And I would probably ask you about the team a bit more. How does a relevant team typically look like for a data science enterprise startup? What's the average profile, if we may say that there is any average profile?
Well, you know, so different kinds of startups have different profiles. You know, SaaS businesses, you're expecting to have someone with a, you know, strong sort of sales background, deep sort of industry experience in there. But for something like what you're talking about, it's not unusual, I think, for the entire founding team to be technical. We are certainly a very strong believer in founder sales. So we think through the period, you know, we typically, the way that the venture works is that each fund will play its position. So in other words, we come in with a seed investor, we lead the journey from seed to Series A with the company, and then, you know, the Series A investor will then have a different set of care abouts. They're much more concerned about scale typically, and they'll then take that journey on the next leg. So for that first stage, which in our view is very typically about product market fit, about customer discovery, about, you know, we've got this great insight into, you know, the way that utilities work, the way that automotive works, the way that industrial manufacturing works. We've been having some conversations with these guys. They seem to think that we're right. Taking something from that point and turning it into something where we actually know, well, what really is the problem? What is the use case that you know, we're sort of addressing? What is that worth? How many customers are there out there that have that kind of pain? And what's the best way of optimizing the revenue takeout from those people? That's kind of the journey that we're going on. Mm-hmm. So it's not unusual, I think, for all the founders to be technical, but for one of the founders to have some you know, natural sales or business development skills. It's very, very hard, I think, for a 100% technical team that just wants to be in engineering, that wants to sit and code, doesn't want to have anything to do with the commercial side. It's very, very hard to back a group like that, because it's at least as hard to figure this problem out, the commercial problem, as it is to figure out the technical problem. And so if you don't have someone that wants to own that problem in the founding team, well, a lot of people think, well, I can outsource that, right? I can go out and hire someone, and you really can't. You really can't, for all sorts of reasons that I'm happy to go in, but it just doesn't work. So it has to be a founder. It can all be technical. You can all be, planning long-term to continue to be technical. Maybe someone evolves into being something like head of product, but it's important that you have somebody that wants to work with customers and figure out what really is the journey that we're on, what really is the problem that we're solving.
One of the pain points that I constantly hear technical founders have is a kind of a prioritization. So they have the long list of potential customers. They more or less understand the industry. There might be a list of, let's say, 50 or maybe 60 potential leads. What's your intuition and previous basically experience in a corporation? How can they prioritize that? Shall they target maybe more accessible, smaller corporations first, or maybe other startups, or they need to go for a bigger ones straight away? What's the approach?
So it's a very hard thing to generalize about, because it depends a lot on the solution that's you're bringing to market and the nature of that. I mean, if there's, for example, an open source or a tools element to that, then you would look at which developers are adopting it and using it, and use that as a way of navigating customer opportunity and so on. But some things, for example, a lot of machine learning applications in an area like finance tend to be something that needs to be done at at an enterprise level, right? Because you kind of need to be part of the credit function or the risk function or whatever that thing is. So you've got to go in there and convince that audience of people to adopt or to trial your solution. I mean, there are lots of ways to. So I'll just talk generally about that, and then pick me up and see if there's anything you want me to sort of double click on. There are lots of ways that you can short circuit that. Lots of big enterprises have sort of innovation groups these days. They are without question a two-edged sword. You can, they're all, what they're looking for is fodder. They're looking for smart, young companies that they can put on their own little internal demo days and make them look good in front of their bosses. You're never going to get a lot of revenue out of an innovation group because they don't control the budgets inside of a corporation. So when you start to look for, I want my first big contract, you're not going to get it from an innovation group by and large, but you'll get some exposure to the corporate world. You might get some good introductions. You'll, get a better understanding about how the company works. And, maybe you'll get some pilot projects or something like that. Lots of accelerators. You have the sort of famous, sort of really deeply technical ones like EF, and of course there are lots now that Seraphim on the space side, or Cylon on more security. I mean, there are lots and lots of things. Lots of enterprises have their own accelerators as well now. Lots of consulting firms have accelerators, and those things can be useful because you're basically, what you're basically doing is trusting someone to be a broker of relationships for you, to help you make sensible introductions and to engage you with the right kind of people who can be decision makers. So there are ways that you can shortcut those kinds of processes. But, if one of the things I always think for an enterprise sale as a way of qualification is, unless somebody is prepared to commit something to you, it isn't that important. So either that's a lot of time, access to production data. I mean, you're probably at the stage that we're talking about, your most important metric, believe it or not, is probably not revenue. Your most important metric is customer discovery and sort of future indicators of where that revenue could be coming from. No one is going to fund you at a Series A stage because you've got, whatever, £1 million worth of revenue versus £600,000 worth of revenue or anything like that. Despite what people tell you, that's just not the case. People want to see what the future, people are always looking at the futures. People are always thinking, okay, I'm investing at this point. What's this business going to look like 5 years from now? And then 2 years from here, what's it going to look 5 years from now? So that's what they're looking at. And revenue is a lagging indicator, always. But what you can do, and I forgot, how did I get to that point? I kind of went down a rabbit hole.
We were talking about possible shortcuts, consultants.
Yeah. So businesses need to commit something to you. So maybe it's pilot revenue, maybe it's something like that is actually financial, but it can also be that they're giving you access to production data. It can also be that they're letting you into their data center so that you can trial something out. It can also be that they're spending a lot of quality time helping you improve and feedback the product. Mm-hmm. So one of the ways that you can help qualify people is by the quality of commitment that they have given back to you. And I think that the customer journey is one whereby at the beginning, as long as you've got, the first 2 or 3 qualifying lenses on the prospect. So, I'm in whatever it is, let's say it's financial services, and I'm talking to someone that's in, the middle office, and I'm talking to someone that actually procures software. So I've got my first sort of 3 high-level lenses on it. Almost every one of those meetings at the beginning is going to be interesting because you'll find something out, you'll get an anecdote, it will help you clarify what not to do. Because the question as a founder that you're always asking is, can my product do that? Should my product do that? If we were to change the product to do that, what would we lose and what would we gain? And so you've got to constantly be making those trade-offs. And that, by the way, is why you always have to be doing founder sales. It's why you can't outsource sales, because if you outsource sales, a salesperson is always thinking, how do I sell something here? How do I sell something here? How do I sell something here? And they don't care about this kind of, pipeline of product discovery. They'll do whatever they need to do to get a sale, and they'll end up sending something that isn't coherent with what you're trying to build as a company. Mm-hmm. So I think that, a founder having those meetings, and gradually you'll get more and more clarity around what a good customer looks like and what the buying signals are and what the pain points are that will take you into a business. And another question that you asked is about the size of enterprise. And that's something that we care about a lot. Big enterprises are big beasts. And there's a famous blog that I think, I forget who wrote it, but there's a famous blog by one, I can't remember the guy's name, but it's basically called, it's Elephants, Deers, and Rabbits. Mm. And he basically goes through, I'll remember the guy's name in a second, but anyway, he goes through and basically says, for a startup to go after elephants, to go and bag elephants, if you can do it, it's fantastic because they're huge and you can live off an elephant for years, right? But it's much easier to get, and the problem with rabbits is they're kind of often too small to be very interesting. You don't get to eat long. You need to find many more, and the cost of getting rabbits can be quite high. So what you end up on as a startup is often something in the middle, something that's substantial enough, deer to live on for a while, but is also something that maybe doesn't have 19 levels of decision making. Won't take 2 years. You don't have to, you don't get to this point and then discover you've got to go through procurement, all those kinds of things. Now, I think that enterprises, when you're in that customer discovery part of the journey, it's okay to talk to enterprises because you will find out an awful lot. But what you may find is that as you have to narrow your use case and your proposition to something that is very clear and that you can deliver convincingly and differentiatedly, that you narrow your prospect list and will probably end up looking much more like a deer than a giant enterprise.
Mm-hmm. Mm-hmm. I see. Yeah, the importance of enterprises and customer discovery, I guess, is really sometimes underappreciated. I mean, the interesting point to me here is that enterprises look at many startups, and if you talk with them, probably sometimes you can guess what do they think about them? What do they think about your competition? I'm not sure that it is always doable to discuss competition, but I guess a founder may get some hints, some clues about how the competition works from talking with enterprises who are constantly approached by many other startups.
And you have to, I mean, I think one of the issues, if you look at a big enterprise now, I mean, everyone loves the startup economy. I think that it is true and sort of well understood that innovation takes place outside of the firewall. Mm-hmm. You know, it's very hard for large corporates to sort of do breakthrough innovation. Some of them may have huge R&D budgets, but even when I was at Cisco, we had massive R&D budget. But most of that went on product line extensions, frankly. Mm-hmm. So Cisco is one of the most acquisitive companies on the planet. So innovation, people rely on it. People are always trying to find startups to work with, to engage with. But if you look at that across a company, you know, like a big bank or Cisco or a big consumer goods company, you may be talking about hundreds, if not thousands, of small companies that somebody somewhere has engaged. And only a very tiny percentage of those are going to go on to become core vendors. Mm-hmm. to the corporation, and the ones that do that will be because they're solving a real problem. They've hit a real pain point and they found something that the company really values. But I think the point there is it's very easy to have a lot of time and energy sucked up in these processes and to get not a huge amount at the back end. And you have to be super cautious about that with big enterprises. Great for knowledge, great for customer discovery, great for data sets and things to play with. It's tough to convert those people into big customers unless you've got a lot of experience and a lot of time and a lot of resources to throw at the problem.
And how typical in your experience a situation where when an enterprise potential customer asks to do some customizations, to introduce some features, maybe to do some custom development, and how a founder may find a fine balance between to avoid becoming a consultancy, for instance. How these dynamics work?
Yeah, I think another question we could probably talk about for the whole time. I think it's tough. There's clearly some value to that because what you're trying to do with customer discovery is discover, what are the customer pain points, what do they care about, and almost certainly you will find that your original thesis needs to be changed, needs to evolve, and so the opportunity to be working with someone with a real problem, with a real data set, with a real customer of their own, and to adapt what you're doing to solve that problem much better is fantastic. I mean, that is something that's well worth doing. So if you're good, you can certainly harvest product development and have a customer at a minimum, be your product manager and helping you with features, and possibly even be paying for some of that through a pilot or other area. Mm-hmm. The second kind of bucket of things that come along is that there's probably always going to be some things that you don't want to do that somebody's going to want you to do. Some integrations, maybe an extra feature, maybe, a link into some analytics layer or whatever the thing may be. And you're going to have to do some of that to get customers. And over time, that will get less. And over time, your ability to say no will get greater because your brand will grow and you'll have a much stronger proposition in the marketplace. And, what you should always try and do is charge for that. You should always say, that's great. We want to work with you. It's fantastic that you've trusted us. But, that's not on our roadmap, and we're going to need to divert our engineers, that are busy coding the next set of features. And, you need to pay us whatever, 800 quid a day or £1,000 a day. And you should charge rates and go into a negotiation to do that. And be very wary of people that want a product for free and want a customization for free. And you've been having these conversations for a long time, and always telling you it's going to be next week and we're going to do this great and my boss is going to come in, it's going to be fantastic. Just be super wary of that situation. Mm-hmm. because I've seen so many of those, and they take months and months and months, and it's always going to be coming, and it never does. And then there's a third bucket of things. So I think that middle bucket, try charging for customization, expect that you're going to have to do some customization that you don't want to do. And then there's a third bucket that says that people who either want you to change the product into something that isn't what you want it to be, put it all in-house when you want to run it in the cloud, and you don't really want to have to deal with some sort of legacy implementation. And almost no matter how exciting some of that stuff is, or even if they want to pay for it, you're going to have to say no, because it's not your core business. And you mentioned something that I think is important, which is this notion of consulting in startups. And investors do not like services-based businesses by and large, because they don't scale. You have to keep adding more people, and the complexity grows. But I don't think at this sort of stage that you should be too worried if you have a chunk of services in your mix. I don't think it's a bad thing. If it's helping you, the goal is to get to product market fit. The goal is to go on the customer journey where you know what the customer, who the customer is, what the problem is, what the business model looks like. That's the goal. And if there's a bit of services in that mix, particularly if your customers are larger companies, I think that's all right. You can get rid of that later.
Yeah. And what could be the red flags that may help a founder to understand that it's too much of a services, it's too much of a consulting, and maybe just to slow it down a bit?
Well, I mean, so at the end of the day, you're in the business of selling a product. So if there's no product sale in that mix, if it's all, customized or all one-offs, then, that's the first set of instances. I think if what you're being asked to write, or what you're being asked to produce is not, is not coherent to the overall product vision, or perhaps at most one step removed, then you have to really ask about why we're doing this. If it's coherent to the overall product vision, then that's great, right? Because somebody is hopefully paying for us to build our product, and we can harvest that and we can reuse it. If it's plus one, well, we'll probably see another Zendesk implementation or another, Zero interface. Somebody somewhere will also have that pain. So we'll do that, and we're going to get this customer as a reference, and it's going to be great. So we'll do that, and hopefully we'll be able to reuse it again at some point in the future, and we're going to get paid for that, hopefully, or at least make it absolutely clear to the customer that they're getting something amazing for free, because we really, really want their core business. But if it gets to be +2, and you're kind of like, well, we're having to write a whole module, it's going to take 3 months. It just doesn't really, I don't think we'll ever use it again. We don't really want to be in the, whatever it is, risk analytics business. We don't really want to be writing all these interfaces to these huge ERP systems. I just don't think that's our core business. You just have to be, really cautious and say no, or be, take a very bold decision that you're willing to take that risk. But I think, so the further you get away from the core of what you're trying to do, the tougher it should be.
I see.
Now, if you're thinking about, if we put that back, that's a general answer. If we think of it in the context of data science, machine learning in particular, well, interpretation is a consulting business, right? So we've run these models, we've analyzed this data set, we've come up with these patterns, with these trends, with this time series, whatever those things may be, and it'll often be that your first customer won't necessarily know how to interpret that, won't know how to draw the conclusions and lessons, won't maybe be able to present that in a convincing or meaningful way to their management. So you're probably going to have to spend quite a lot of time in your first few engagements doing that work. And that mix could be, I don't know, maybe could even be as high as 50-50 for the first few. But then increasing as that goes on, you'll automate some of that, You'll be getting better at what your target customer should be. You'll make your results, your analytics kind of layer much clearer, much easier to understand. So you learn lessons. That consulting and services piece becomes very additive into what you want to build back into your tool and into your platform.
I see. So we've talked about some kind of micro level, let's say, how a founder may interact with the corporation, move these pilots, etc. There's macro level as well that you mentioned, these buying cycles, replacement cycles. How to understand them better? I assume that not every corporation will be willing to tell a lot about budgets, maybe about its stack, at least at the early stages of engagement. So what to look at to understand it better?
Well, I mean, there are lots of data services out there right now, of course, that will tell you what stacks people are running and all these other kinds of things. So you can find a lot of that data out. But yeah, so it's a tough question. I mean, so there's we work with startups that go into this with a mentality of, we have discovered the secret of how to make gold and we're going to put you all out of business. And so it's a kind of, burn everything down, scorched earth, start over kind of a strategy. We're smarter than you are. And that's, that's fine. It's pretty hard to pull off. And what you end up by doing, if you take that kind of approach, is you're going to have to build the whole stack yourself. So you're going to have to, you're going to have to be, a new manufacturing company. You're going to have to be a new financial services company. You're going to have to be a drug discovery company, whatever the thing is, right? So you're going to have to build the whole stack and do it all yourself. And you need a lot of money. You're going to need, incredible technical vision, so on and so forth. If you take a different approach, which says, well, we're going to have to go in and work with the business and augment an existing business process, then that's a much more feasible strategy. But it also means that you've got to understand the rhythms of the machine that you're going to engage with. And going in, for example, and trying to replace the entire estate, the data, so I've seen lots and lots of businesses recently looking at the data analytics stack inside the corporation. And you've got to understand that whether they're good or whether they're bad, there are things like, Tableau and ClickView and Microsoft, whatever, that are incredibly well established in the enterprise. And they have enterprise relationships, and they have support relationships, and they have people trained in them. To go in and displace that kind of stack in a large or even medium-sized company is really, really, really hard. You're going to have an extraordinary value proposition. You're going to have to sell at a very high level. And you're going to have to be really, really confident that you can take on all the work that's taking place right now inside those pieces of software and do it successfully. Really, really going to be almost impossible to do. So what you're going to have to do is, if you're playing into that stack, is find something that sits or works with that stack that does something better, that breakthrough in productivity, breakthrough in presentation, breakthrough in speed, whatever the thing is. And, you can use that as a strategic entry point and then work backwards and take more and more of the stack away. But to go in and displace an existing process, an existing software stack, is really, really hard work. And you're fighting, not only are you fighting all the users, all the other users of that product. You may have a sponsor that thinks your product is better than anybody else, but you're fighting all the other users of all those products. You're fighting IT, you're fighting procurement. It's a really, really uphill battle. It's going to be really, really tough to do that, I think. So if you're selling into, smaller businesses, startups, they're buying tools for the first time, that could be a better way of getting something like that started. But when you're going to somewhere that has an existing business process, an existing workflow, going in there and trying to replace it all day one is a really tough sell.
I see. And there are probably a lot of other dimensions, how a corporation may or is interacting with a startup there are investments, there are obviously acquisitions. I guess all of that deserves a separate talk or maybe a separate book, and I'm sure there are books and there are talks separately on them. And before we close, maybe just 2 or 3 last questions. Is there any theme or question that we don't cover but you believe it deserves to be covered? Something that I didn't ask maybe, or didn't even think about.
So I'll pick up on a couple of points that you just made there. So one is procurement. So if you deal with any larger enterprise, you end up by dealing with procurement. Your ability to get through procurement is usually dependent on the strength of your sponsor. And one of the things that you have to be able to figure out if you're trying to sell into a bigger or even a medium-sized business is my sponsor a decision maker? If I'm talking to the head of sales in any corporation, heads of sales get what they want, because that's just how stuff works. People own businesses, that run businesses, get what they want because they're revenue makers, they're money makers. They will always get what they want. So having someone in that kind of line of command is always really helpful and can help push things through procurement. So going into procurement, you need a strong sponsor, you need the right sponsor, and you need to stand your guard. Discounting year one, fine. Discounting product sale, fine. But don't give up your value forever. Don't do a one-off license. Don't do something that you can't come back and rectify. After year one, when you've done your trial, you've done things cheaply, you can always come back and raise the price as long as you've left yourself a strategic opportunity to do that. So the thing is, I don't mind giving up something now, because right now what I need is I need this logo, I need this proof point, I need to go in there and show that my tech works at a high volume in a big space. So I don't mind giving up something now because it's valuable to me, but don't sign up forever. Don't give the rest of your future away with procurement. You have to really be careful with procurement. Most corporates have innovation groups, as we talked about. Most of them have now venture groups, either investing off the balance sheet, sometimes with separate funds, depends on how sophisticated they are. There's usually a difference between somebody taking a minority stake and somebody that wants to do an acquisition in terms of the kinds of thresholds and milestones that people need to have proof for internally, and the sign-offs. It can seem very attractive if you're in an industry to get a big brand name investing in you. The danger with that always is that the assumption of all their competitors will be, well, they've got the inside track. They know what's going on. They know what the product pipeline is. If we do business with this small company, then our competitors will know everything that's going on about us, blah, blah, blah. So if you're going to take investment, you have to be really cautious about it, either in terms of the threshold at which you take that investment, so a very small percentage, perhaps having multiple investors from the same industry, and just really being cautious about how close you get to them in terms of things like information rights and observer seats and all that kind of good stuff. Mm-hmm. So, but what we do see, and Peter, I'd be interested in your thoughts on this, but what we do see is that corporate venture capital is becoming a big source of investment for startups. It's becoming bigger and bigger. The sort of innovate or die is definitely something that the world's corporations have taken to heart.
I don't remember the exact numbers, but we've done some research on post-COVID, post-spike maybe time, like April, May, this month. And things that I remember is that corporate venture capital investments, they didn't fall as sharply as independent VCs investments did fall. So I would agree that the volume, at least, and participation of corporations in the number of deals is either flat or even maybe increasing, and even more in Europe, because I would say it's a bit less developed here than in the US compared to the US.
Yeah, and I think there's a difference between a VC like me, who is financially motivated, and a VC like a big corporation that is strategically motivated. If we don't get ahead of this technology, it could kill us 5 years down the road. So it's a very different motivation.
Yeah, absolutely. And that definitely deserves a separate talk, because there is something in the middle like Sistema. And it's really very interesting talk. And the last one, maybe before we close, a single advice to a data scientist who plays with neural nets on his or her notebook somewhere in the garage and thinks about a startup. The most important advice, in your opinion, would be what?
So I always used to think, so I lived in California for, I'm a Brit, but I lived in California for a long time. And I always used to think that, you know, when I grew up in Britain, everybody wanted to be in a band. And when I went to live in California, or everybody wanted to be in a startup. And it's kind of, you know, gone around the other way. So I think, you know, you kind of have to know who you are. Are you the person that wants to do that, and wants to take that risk, that is prepared to put everything off and you know, take all the risks, all the financial risks, because you want to pursue that vision? Or are you not that person? Because I'm not sure, on average, the expected return in terms of an overall career between being you know, an absolutely amazing top data scientist at a great company like Google, or going out and being, you know, an engineer or a founder in a successful data science business. I'm not sure that the expected return is necessarily that different. I think there's more standard deviations on the startup side. You're quite likely, most likely, to get nothing out of it. You know, there are a small percentage of people, of course, that go on to be super successful. But you know, it's you kind of, I think you just have to look at yourself in the mirror and say, am I really ready to do this? Do I really want to do this? Because it's going to be tough. The highs are higher, the lows are lower, which, you know, in and of itself was enough for me to want to do it. But you know, it's always a different way of getting to a career. I don't know whether I answered your question, but
yeah, that's wonderful advice. And I guess when all participants, especially founders, they do these sometimes hard decisions. They make these hard decisions about who they are. I guess the outcome for everyone may be improved. Maybe
yeah,
the success rate.
One of the questions I saw on your sheet was, you know, when should I quit my job? Right?
Yes.
If you have to ask that question, you shouldn't quit your job.
Wonderful answer.
Because if you really want to do a startup, you don't even need to answer that question.
I've heard something like that about artists and painters. Like someone told that he couldn't not paint. It just
that's what you have to do.
Just what we have to do. So thank you once again. It's a wonderful talk and super useful. Thank you, and I'm sure we will hear a lot of good news from episode 1 from your wonderful data science portfolio as well. Thank you, Paul.
My pleasure. I hope it was useful. Sure.